I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, let's start. It's first of all, earnings bonanza this morning. We got bank earnings.
It's one of the hardest days, Catherine. And there's the day when Verizon reports, the day when Boeing reports, Caterpillar, and today. And our problem here, of course, is that if you don't listen to the conference call, like the people who bought J&J before they listened to the conference call, if you don't listen to the conference call, like the people who bought JPMorgan up, these are people whom I've just castigated forever, Catherine. I don't think there's any teaching people that machines write the headlines. J.B. Hunt being the best example I talked about this morning. And I just think that it's a very unfortunate thing when people do not realize that the commentary controls, not the headline.
And I want to get to JPMorgan in just a second, but I do want to ask you, our real money technical analyst, Helene Meisler, this morning had a column about, and I'm going to quote her, she wrote that we are overbought and that sentiment is still relatively elevated and that she expects volatility to pick up in the next week or so. So I'm wondering, do you agree with that?
I brought Helene Meisler into the fold when we started. She's someone who helped teach me technical analysis, along with the great Justin Mamus. Far be it from me to disagree with anything she says about being overbought or oversold. My S&P oscillator is not over 5%. That's what I pay the proprietary oscillator. So I'm not as concerned about oversold as she is. What I am concerned about is China trade. And hardliner put on their side, maybe the president steps up on our side. That would dovetail with what could go wrong. I do think also that while the earnings so far have been good, the revenues are just somewhat good. So there's room for what I like, for what she calls volatility, which is why we're positioned as such. And I will talk about it on tomorrow's conference call with ActionAlertsPlus.com subscribers and club members and future club members.
And of course, if you aren't already signed up on Action Alerts Plus, you can go to ActionAlertsPlus.com for a free trial and see Jim live breaking down what you need to know ahead of earnings season. So speaking of earnings season, let's talk about JPMorgan, which is our real money stock of the day. It reported earnings this morning. Jim, one thing that Jamie Dimon said that stuck out to me was that he said that fast credit card sales were reflecting healthy consumer spending. Right. And I'm wondering, what happens to JPM if the consumer starts to worry?
Well, I think that we have to go the other way. I mean, if the consumer hasn't worried yet, then the consumer may not worry. The consumer's been the star of the whole banking show. By the way, retail sales better than expected. It's the industrial side that people should be more concerned about, particularly autos, which have been a disaster. You'll get CarMax on some commentary. On JPMorgan, it was good, okay? It was not great. Efficiency ratio good. There were some lines that weren't spectacular. There were some lines to say it was better year over year, not quarter to quarter. It was not the standout. Goldman Sachs was better today. Citi was good. These are all obviously relative issues. JPMorgan is not an expensive stock, but it's expensive versus tangible book. These are controversial, and one of the things I said would happen is you'll get great controversy over the banks. And Catherine, I hate controversy.
Let's take a step back and let's take earnings season from an investing educational angle. So Jim, why can a stock still fall after beating earnings expectations?
Because it's run. And as I said in Real Money, one of the most important things to ask yourself is where has the stock come from? Now, remember, earnings reports are ephemeral. Pepsi-Cola, 132. They reported better than expected quarter, climbs to 134. Conference call takes it back down to 130, 132. Now it's back all the way up. Why? Because cooler heads have prevailed and they recognize that PepsiCo actually had a good quarter. So your initial reaction is often not the right reaction. And also, I mean, if you look at what's happened over and over again, a stock that's had a very big run into the quarter and does good numbers, but not beat and raise. J&J did not do big raise forecasts. You're just not going to get the results that you'd like. So, I mean, remember, I am adamantly opposed to trading during this period, as I said yesterday in Real Money. I think it's a good place to invest and get you a better basis. On the conference call tomorrow, I'm going to actually reveal about how to own a high-growth stock. I think the people who are watching should join the club or trial the club, because I'm, for the first time, explaining why exactly you should buy high growth and what it means. And I think that you'll be surprised because I'm going to give you the criteria, and it's not the criteria you hear from anywhere else.
Now that's a selling point.
Well,
if I've ever heard one.
look, it's an important club call, and I want people to join the club. Obviously, I'm passionate about what I do with my charitable trust, and I think that we're at a fulcrum moment here because a lot of stocks have run. The ones that haven't run, JB Hunt, that takes a big advance on saying things aren't that bad. The ones that have run, JPMorgan, people say, why wasn't it better than everything else? And then there's stocks like Caterpillar, which we bought for ActionAlertsPlus.com, and it's reacting to every single data point. I want it to be at 135 before it reports. It's not looking like that. Caterpillar being a stock that's uniquely levered to the trade talks, which seem to have stalled. Again.
Surprise, surprise. All right, Jim, before we go, I want to ask you, you put out a Real Money column last night about 6 stocks that you would buy for your portfolio.
Right.
So I'm wondering, when you point out those stocks, what signs are you looking for?
Well, these are stocks that I always put out a list in the second half of the year of what stocks I would have bought calls on. I didn't mention that Real Money. Deep in the money calls to be able to own because they're shining so much, as Starbucks and McDonald's. Are they on our list, the buyable list? I mean, look, if they dropped, I would put Procter. We've missed Procter for 15, maybe 18 points. McDonald's, 10 points. Not my finest hour, but you know what? Here's the difference between me and why the club is important. Have you ever heard a money manager say, not my finest hour? But I was a money manager for a very long time, and I put these stocks on the list in part because I'm jealous of them. They've not come in, and if they do come in, you have to take action. So I urge everyone to look at that Real Money column. It is aggravating to me as a money manager that I didn't do it. But remember, I ran a hedge fund where I could buy calls. And now you could say, Jim, why don't you go back and run a hedge fund and tell us what you're going to do? Well, no, because I would be beholden to the people who are in the hedge fund. But I'm a charitable trust. It hasn't done as well as the market. I've been candid. I can't do most of the things that I'd like to do, especially because of our restrictions. But the list is ironclad, and it's where people go to. And it includes a McDonald's, a Starbucks. Obviously, it's open. It's a Real Money piece, and I urge people to read it because these are what I call the anointed stocks. And we will find a way to get in them in Action Alerts, perhaps on it. And one of the things, remember, the high growth stocks we've nailed. But we'll find a way to get in these if we get a market sell-off. It's certainly realistic to expect one, in part because what a run we've had into earnings. Witness, again, can JPMorgan rally big off of an okay quarter? No. J&J buffeted by opiate, buffeted by talc, buffeted by Xarelto not being as good. It looks like that Eliquis makes me want to buy Bristol Myers, by the way. So there's a lot of cross currents. J&J is still a great American company. But I said in the Real Money piece that the drug stocks are too problematic. I also said that Facebook's too problematic because of Libra. Alphabet's become too problematic because of calls of treason. I sure hope we do not have a repeat of the Army McCarthy hearings and the previous things that happened. I want to talk about Goldman Sachs in our private club call that comes after this. And Goldman Sachs figures big in my thinking, and you probably want to subscribe even just to hear that. Am I pushing the club? All I can tell you is I'm committed to the club. I'm committed to my charitable trust.
All right, Jim, that's all the time that we have for today. Thank you for joining us. All right, guys. That's all the time that we have for today. We are now switching over, as Jim said earlier, to our Action Alerts Plus Daily Rundown show. So if you're on TheStreet.com or on Facebook Live, head on over to ActionAlertsPlus.com. And of course, do not forget that tomorrow morning at 11:30 Eastern, he is going to have his live call. Don't miss it. I'm Catherine Ross, and I'll see you tomorrow.